I think what scares people and they don't understand, they're like, oh, it's too expensive now. I can't buy it. I think that it's breaking that mentality down. Like, no, you don't have to buy one at one time. You can DCA in, you could buy sats, you can stack sats, you don't have to buy one. I think they failed to see the bigger picture. And when Bitcoin's sitting at a couple $1 million one day, which I think it definitely will, they're going to be like, oh, wow, 60,000 was cheap. Should have
Yeah,
got it then. Like whenever I thought, oh my God, 3,000, that's kind of a lot. 16,000, no, that's too much. You know what I mean? So I think it's going to
absolutely.
be one of those things.
Absolutely. Well, and that goes back to what is the value proposition of money? Because ultimately, I said this is at commodity value right now. It's heading towards monetary value. What is monetary value? Monetary value is global GDP. Monetary value is the wealth of the entire economy of the world divided by 21 million. So that's the price that we're going to in the long run. And you can leverage that knowledge now, understanding that it will get there not in a straight line, but cyclically through the natural evolution of the free market price discovery process. And if you play it right, it can be life changing. I remember when I first bought Bitcoin, it was like $160, and I said,
Wow.
"Dang, this is expensive. This is some magic internet money for $160 a coin. That's some bullshit." Well, look at it now, right? So it's the same thing. 10 years later
Right.
from now, we'll be at $6 million. And people who bought at 60 will be like, well, yeah, I thought it was expensive back then, but I was getting the deal
Right.
of a lifetime. And that's where
Mhm.
we are in Bitcoin. And I don't think any other project is going to be able to have compounding annual growth rates like Bitcoin does. The compounding annual growth rate of Bitcoin actually ties into the product I'm building at People's Reserve, the principal protected capital note I talk a little bit about at the
Yeah.
Energy Summit.
Tell us about this. Yeah. Tell us about People's Reserve.
So, look, what's even more important is since we just came off the Fed has a problem, right? They can't raise interest rates, they can't lower interest rates. What are they supposed to do?
Mhm.
Well, here comes that famous saying, Bitcoin fixes this, right? Well, how does Bitcoin fix this? Because it's the most pristine form of money in the world and the most pristine form of collateral in the world. Why? Because there's 21 million units, there'll never be any more. And because of the inflation schedule, it's harder than gold. It's harder to earn a Bitcoin than it is to pull gold out of the ground and supply it to the marketplace. So no matter how much people want more of it, the only way to get more of it is to pay a higher price. That
Mhm.
creates a price dynamic in Bitcoin, and in all of finance. Price discovery works the same way. Bitcoin's not special. But what happens is when you get a stock like Apple or Microsoft, you get what's called a compounding annual growth rate. And the compounding annual growth rate of Bitcoin is 60% over the last 10 years. That blows away everything else. Nothing else even comes close. So what you can start to say is, well, wait a second. What if we vertically integrate Bitcoin into treasury bills? What would that do? And what you would do is you would sell a principal protected capital note. And you would, let's say you raised like $100 million in this note. Well, you would take like $80 million of the note and you would buy US Treasury bills. And these US Treasury bills are paying 5% right now. So when you keep rolling that over and over, at the end of the 5 year note term, you're going to end up with $100 million. So if Bitcoin goes to zero, you don't care. You have the $100 million you invested. Sure,
Mhm.
in real terms, you didn't gain anything because you only have the same nominal value that you invested, but you didn't lose anything. Okay, now let's say Bitcoin doesn't go to zero, which it's not going to. So when it
Right.
doesn't go to zero, the performance of Bitcoin becomes the yield of the note. So if the performance of Bitcoin is 60% compounding annual growth rate, or what they call CAGR, if you cut that in half to 30% CAGR, and then you cut that in half again to 15% CAGR, well, the risk-free rate of return today is a US Treasury bill at 5%. If Bitcoin doesn't perform that well, we can create a debt note that performs at 15%, 300% more than the US Treasury bill with principal protection. So when you start taking Bitcoin and integrating it, and this is on a private level, the US government can do this. Matter of
Wow.
fact, Biden or Trump, hit me up. Let's go. Get a real
Biden
economy
does
guy in there.
not know what you just said.
Yeah. Get a real economist in there and start to innovate, because we're at the point now where we're either going to be moving into hyperinflation because people are losing trust in the system because that's the difference between inflation and hyperinflation, the loss of trust. There's no mathematical point. I've studied hundreds of fiat currencies that have all failed.
Mhm.
The economics textbooks will tell you, oh, once you get to 50% inflation, that's hyper. They try to mathematically define hyperinflation. But there is only one way to define the transition from inflation to hyperinflation. And now all your listeners will be able to watch and see this with their own eyes as it happens right here in the United States. It's a loss of trust. When people no longer trust the US government to control the budget, when they start to realize that they can't control the elements of inflation, which the Federal Reserve admitted by targeting inflation, right? It's not like they're like,
Yeah.
oh, inflation's some bad enemy. They want 2% inflation per year as their target, right? So it's like part of the system. But when they start to realize there's nothing that they can do, if they issued a principal protected capital note backed by Bitcoin, the more money you print, the higher the Bitcoin price goes. The higher the Bitcoin price goes, the more your treasury notes produce higher yield. And now this goes back to our supply demand. The higher the yield, the more demand for the note. So you could sell as much currency derivatives backed by the US government you want if you just back it with Bitcoin and vertically integrate Bitcoin into the actual debt note. And at People's Reserve, we're doing that on a private level with the goal and plan eventually to offer it with states on a municipal level and hopefully even the federal government on a national level.